It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. Welcome back to Trading Stocks Made Easy. It is Tyrone Jackson, the wealthy investor. You know, if you're going to really be successful in the stock market, then you're going to have to learn how to use the language of wealth. And that's what today's show's all about. Everyone says, yes, Tyrone, I'm totally open to making thousands of dollars a month trading stocks, and they're shocked when they learn that the stock market has a language all its own. Now, just so you know, some of the terms that you're going to hear me talk about today are used with regularity in the wealthy investor world. I know that the language of wealth and stock market trading and accounting is vast. I'm just going to introduce or reemphasize the terms that we use in my program that you should know and that you'll hear with frequency. Okay? So here's a stock market lesson and an introduction to language at the same time. Everything we do in the wealthy investors world is based on revenue. In other words, how much money a particular company actually generates on a quarterly and annual basis. Now, what I want to tell you is when you're buying shares in a company, you're actually part owner of the company. If the company's top line revenue, meaning their gross, is increasing on a quarterly basis, that stock has the greatest probability of going higher. You see, I meet a lot of people who like to trade cheap stocks. And they think if I can get this stock cheap at $12, $11, $6 a share, and it starts to rise, I'll be a multimillionaire. What they don't know is that has nothing to do with being a great stock picker. You have to understand the fundamentals of the game. In other words, if you were going to sit down at Monopoly these days and you've never read the manual about what the game of Monopoly is like, or you've never watched a YouTube video of how to win the game, you know, there are all these videos on YouTube about how to win Monopoly and be the number one player in your neighborhood. If you've never studied the rules, how are you going to win at the game? How are you going to win? And the reality is you don't stand a chance of making a lot of money if you don't know anything about revenue. So what makes people millionaires in the stock market is learning how to invest in companies where the annual or quarterly revenue is rising. If that annual or quarterly revenue is not rising, your stock price is not going to go higher. Why? You don't understand the rules of the game. Publicly traded companies that become popular always have top-line revenue growth. So let's talk about this. January through March is known as Q1, the first quarter. First quarter revenue for most companies are slower, particularly in the retail sector. You expect to see slower growth on that top-line revenue. So companies like Target, Toys R Us, Macy's, right, have slower revenue in the first quarter because most of their money is made what? In the fourth quarter. So January, February, March, first quarter, right? April, May, June, second quarter, or the word on Wall Street is Q2. So Q2 revenue, if Q2 revenue is higher than Q1, there's going to be demand for that stock. So rather than putting your money in a mutual fund, why don't you stick with me and learn how to choose good companies that have top-line revenue growth in Q1, 2, 3, and 4. Guess what? You'll be choosing winning stocks more often than not. Or as we call them in the Wealthy Investor Program, good dates. So let me talk to you about dating for a moment, particularly if you're over 35. Now, you got to remember that most men are visual, right? So when we're thinking about going out with a woman, we're going to look at her and see if she's physically appealing. But that's not going to be enough because at some point, if you were to go out on a date with a woman who's gorgeous, but she can't keep her job and you guys get into a serious relationship, what's going to happen? Her lack of ability to generate consistent revenue is going to put pressure on your relationship, and therefore, over time, she will become less attractive. They say, I heard this once, and I'm going to drop this here in this podcast, right? They say that men look at women as sex objects and women look at men as success objects. Now, I'm going to leave that to you to determine how true that is, but let's think about stocks in a similar fashion. Women are frequently attracted to men who can be strong providers. So if you're a woman and you're going on a date and this guy who you're dating has annual revenue, his salary keeps rising and rising, is that going to feed your sense of security in the relationship? For most women, yes. Now, we're in an interesting time in history. There'll be some women who'll say, I don't need a man for money and I'll do my own thing. Okay, I'm not here to fight that battle. But for most women, if they're dating a guy or trying to choose a partner for the long term, they generally are attracted to guys whose income is rising. Well, in the stock market, if we're going to go on dates with members of the Dow Jones Industrial Average and the S&P 500, doesn't it make sense that we only date companies whose annual or quarterly revenue is rising? Right. If you get that, you understand why I'm always talking about that top-line revenue. Supremely important. Now, the other aspect to revenue is the bottom line. So on an income statement, the first thing the company puts out is their top line. Hey, this is what we're making. At the bottom of the income statement is something called their bottom line. Now, what is your bottom line? After all bills have been paid for the quarter, did you actually have a net profit or a loss? Now, this is where it gets tricky in today's stock market, and this will throw you if you don't have the financial education. You ready? There are some companies right now in the stock market that have incredible top-line revenue growth, but after all bills are paid, they're in the hole $30 million or more. Is that your ideal date in the stock market, to buy stocks where the top-line revenue is growing, but yet on the bottom line, after all bills are paid, they still owe $30 million? Ideally, no. However, some companies have such growth stories that are tremendous, and they form these great partnerships, and maybe they dominate in their niche, that despite the loss on the bottom line, the stock still races higher. Okay? You see that a lot in semiconductor stocks or technology stocks, like companies that provide security against fraud, or transactions on the internet, et cetera, et cetera. These companies are so young, they're so new, their revenue is incredible, but their bottom line has losses on it, and sometimes the stock will take off. Ideally, you don't want to get caught in that trap, but it happens a lot these days. So top line versus bottom line, supremely important, because that has some relevance as to whether or not the stock that you're trading is going to go higher. Try to always stick with stocks that have revenue beats on the top line and on the bottom line. Okay? All right, let's talk about this idea of stocks that pay a dividend. Stocks that pay dividends have lower risk. Why? Institutional shareholders love receiving 35, 50, 45 cents a share every 13 weeks for doing nothing but owning the shares. Why? That's one way in which institutional investors can make millions and millions and millions of dollars. So if you have top-line revenue growth and you're netting out on the bottom line, plus you pay a dividend, a return on investment to shareholders, what's going to happen to that stock? It's going to fly. Except you have to know the story of the company. So you'll hear me say, don't buy the stock if you don't know the story. If you don't know where that revenue is coming from and you don't know the growth history of the dividend, what's going to happen? You might be choosing a bad date. So you see, if it's not enough to just say, hey, Tyrone, I want to be rich and I'm going to be rich, or hey, Tyrone, I'm going to be your best student, you have to understand the language of wealth, what makes stocks rise and what creates a demand for the stock. And what creates the demand for the stock? Top line revenue, bottom line net, and dividends. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, today we're talking about the language of wealth as it relates to stock picking and investing. We talked about dividends, we talked about top-line revenue, we talked about bottom line, net, right? And now we're going to talk about ex-dates. So what is the ex-dividend date? Well, when a company pays a dividend, it's nothing more than the return to shareholders on capital. The day that dividend is paid out is called the ex-date. That ex-date is important because you need to own the shares by the ex-date in order to qualify for the dividend. Okay? All right. So I always say it's imperative that you own the stock 3 days before the ex-date. Why 3 days before that dividend? Well, we know that stock transactions, similar to writing a check, clear in T plus 3, trading day plus 3, right? Okay, so if I buy the stock on Monday and the ex-dividend date is Friday, when I buy the stock on Monday, I don't really technically own it to Wednesday or Thursday morning. If I want that dividend, there's a strategy in the stock market called dividend capturing. If I want that dividend, I have to make sure that I own the stock 3 days before the ex-date so that the transaction clears in my account and I am a shareholder of record by the ex-date. The one way around that I like, if you're covered call writing, just make note of the ex-date, write covered calls, you'll get the covered call income, which is guaranteed, plus if you own the stock 3 days before the X, you'll get the covered call income and the dividend deposited into your account. The way that we structure our portfolios in the Wealthy Investor Program has to do with allocation. You know how I'm always talking about having 1/3 of your money always in conservative stocks. Therefore, your money will grow over time. That's where your wealth comes from, actually, right? I don't have to worry about dividends on my Dow stocks that I'm holding for the long term. Why? I'm not trading them. So I know I'm getting X amount of dividends per quarter because 1/3 of my portfolio is not being traded. It's just sitting there and capturing the value of the stocks rising. So if you don't understand ex-dividend date, there you go. You have to own the stock by the ex-dividend to qualify for the dividend. But if you're going to be actively trading a stock that pays a dividend, make sure you own it 3 days before X because a transaction has to clear from you as a shareholder. And by the way, for those of you a little bit more advanced, you'll find that when one of your Dow and S&P stocks has an X date, very often you'll get called out early on your covered calls. So that's the other reason I really like knowing the ex-dividend date and being a covered call writer simultaneously, because sometimes I'll get called out, which means if I was selling an out-of-the-money call, I'll have a cap gain there plus the X date. You see what I'm saying? So you get to make, essentially 2 paychecks from that one stock. There's a lot to trading and investing in the stock market. Again, without that financial education, you simply won't know what you're doing. It's like playing pool in the dark. Why? You never read the manual. You don't know how the game works. You've never studied. So how are you going to be rich? Rich people are not rich by accident. They're rich by intention. Can you write that down? Most people who are self-made become wealthy because they focused on it. And here's what we know about the universe. Whatever you focus on the most, you're going to get more of in your life. So if you start studying stock market trading and investing, what are you going to get? More money, more wealth, more successful trades, more residual income. And what is the cornerstone of the Wealthy Investor Program? It's all about monthly residual income from the stock market that you can count on. Today I feel a little bit like I'm preaching today. Like I might even be Reverend Tyrone today. All right, well, we'll see how Reverend Tyrone does for the rest of the show. Next point I want to get to is this notion of the float. Now, this comes up a lot in stocks where there's a lot of volatility. What is the float? The float are the amount of shares in the public domain to be traded, right? Smaller the float, generally the faster the stock price will move. Why? There are less shares. So what is the ideal set of circumstances for us as wealthy investor community members? We're always paying attention to the float size along with the institutional investors who own shares in that company because they help shrink the float. So this is why Facebook, or now Meta, in my view, will never be $1,000 stock, even though the company has billions in revenue. The float is too big. There are too many shares in the open market to go higher. I love the business model of Facebook. Mark Zuckerberg is a talented genius, but if there are too many shares in the float, it prohibits your stock from going higher. Now, if you don't understand float, it's because you never studied and you never read the instructions. So how are you going to win the game? What I want to help you do in your life as Tyrone Jackson, the wealthy investor, or Reverend Tyrone, if that's what comes out of today's show, is I want you to be a better stock picker. It's not impossible. It's not difficult. But to win at any game, especially the stock market, you have to understand the rules. You have to learn and put some intention to stacking the deck in your favor. And that's the big secret about becoming mega wealthy in the stock market. And I have students who do it all the time. So if you have the right mindset, if you're just open to learning more, here is your chance to say, I'm going to commit to studying in the stock market. So I've given you some gems here today, and I don't care how many YouTubers put up these videos telling you how great they are in the stock market. If they never talk to you about top-line revenue, bottom-line revenue, ex-dividend dates, and floats, don't pay any attention to them. This is Reverend Tyrone saying, I always wish you the best. I really want you to change your life financially. Join me, and we'll change your life in 2 to 5 years. Thank you for listening today. I appreciate it, and I'll talk to you soon. So long now.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button, and you'll automatically receive our next episode.